AIM-listed Nostra Terra Oil Gas is focused on achieving what it calls profitable, rapid and sustainable growth with assets in the US. Its goal is to generate returns for shareholders by acquiring and managing a growing portfolio of both new and mature oil and gas assets. And it's recently raised first half revenue by 55% on a year-on-year basis to a record high. Matt Lofgren is Chief Executive. He joins us now. Matt, welcome.
Thanks.
I should say that rise in revenue is from quite a low base, but you do have production, don't you, in your stable of what you're offering shareholders at the moment?
Yeah, I mean, Nostra Terra is an oil and gas company, an E&P specifically, and E&P, as you know, is exploration production. And one of the differentiators between us and most companies is that most companies are really focused on the E, the exploration, but very few actually get to the point where they have production and they have revenues, and that's where we are. We've been focused on that so far.
Okay, let's take a look in some more detail about that in just a moment, but talk to us a little bit more about what else it is you're offering in terms of your spread of assets that you've got.
Yeah, so our focus has been mid-continent U.S., and we do have assets outside the U.S., and we'll continue to look at other assets outside the U.S., but our focus has been mid-continent, Oklahoma, Texas, and in particular right now most of our focus is in Texas, where our current assets are in East Texas and also in West Texas. In East Texas, we have the Pine Mills asset is our primary asset there. It's a nice stable production. We've actually been increasing our production gradually, carefully by investing our free cash flow, our profits from that field, reinvesting that into workovers and gradually bringing up our production there.
Yeah, just carry on with that asset, particularly that East Texas asset. It's a nodding donkey, I believe, so it's the old traditional way of just sucking the oil out of the ground. How many barrels a day are you producing at the moment?
In that field, in that area, we're about 120, 130 barrels a day. We've done some recent workovers to increase it significantly from there, but we're also doing some work with the rest of the facilities to be able to handle the extra capacity. So that fluctuates a bit, but we are continually and gradually increasing that. Yeah,
and then of course you've got this West Texas asset, haven't you? The part of the Permian Basin. Explain what the Permian Basin is, first of all.
The Permian Basin is pretty incredible. It's actually the most attractive, the hottest play in the world right now, and there's no exaggeration on that at all. The Permian Basin is the place to be. There's so much opportunity there, and the main thing that people look at is the stacked pay. Stacked meaning that there's formation after formation stacked on top of each other. In the U.S., we use the analogy of pancakes, but I know that's not a common food here. But you've got one stacked after another, and each of these formations you can drill and have production vertical or horizontal. Most of the activity right now is horizontal drilling into these formations. So if you have one particular formation, you go in and you drill that horizontally, that land, that lease is yours, that asset is yours. So you can, at a later date, go into a different formation and take that horizontal as well from the same location, from that same area on the surface. So it ends up being a multiplier effect, in essence, with whatever you own. If you have one particular place that you went in to drill, or that you already have a well, by having 5 or 6 different formations means that you've got 5 to 6 times the multiplier that you can use on that.
Where are you at the moment on that asset?
We've been quietly building up a little bit of a position here over the last couple of years.
So you've been buying land, buying position, okay.
Yeah, and we've been doing that through buying existing producing wells, a little bit of production, nothing exciting with that, and that's fine because what we're doing is we're actually banking future locations that we can drill. So by having the existing production there, these wells are producing and hold those leases, so there's no expiration to drill those. So that creates that inventory that we can go drill anytime we want, whether we want to drill that tomorrow, whether we want to drill that a couple of years down the road or 10 years down the road. So we've been building up that position there, that little bit of that foundation. We have been adding production there. We've drilled a couple new wells this year that have been successful, very successful wells. They're typically about a 2-to-1 return at $40 oil prices. And here we are nearly double that at this point. So these are exciting from a simple conventional perspective. But the area as a whole on where we are, with this foundation that we've started, we're looking to expand that significantly from here. We've built a team and we have everybody in place. And to give you an idea of what else is going on and why this is such a hot play with the stacked pay that's there, you've got companies I think you've read the Financial Times. You're familiar with what's going on today in the activity. But the headline today in the FT is that you've got $50 billion in global deal making. 50 billion. That's a pretty big figure, obviously. There's been 30 billion alone that's happened in 3 different deals combined to get to 30 billion the first half this year over in the Permian Basin.
Right, so this is just really focused on rich areas like the Permian Basin.
Mm-hmm. Yeah, and the Permian, I mean, of the 30 billion, one of the deals this year is the big headline, for the area. Yeah, BP has spent over 10 billion just to buy into that area as their initial acquisition to expand from there.
Of course, BP has got a lot of money, and I know Nostra Terra Oil and Gas does not, but I know you have a facility, don't you? You can draw on. Is it 5 million, I believe?
We have 2 facilities, actually. We do have a facility with BP, a hedging facility with BP, but more significant than that is our senior lending facility with Washington Federal for $5 million, correct?
So what will you do with the money that you've got available? What is the priority now in order to make sure you can start moving these assets further on, or are you just staking out more and more land?
A little bit of both. For us, it's been about having that right balance in the portfolio. And as I said earlier, the beginning of the portfolio is focusing on that production, building that foundation. So we've been doing that. And earlier this year, we announced that we were cash flow positive. We got to that point. It's a pretty significant place to be. So we're very happy with being there. We're comfortable with being there, but we're not complacent by any means. So now we're looking to take bigger steps and move that on further from here. So we've used our foundation, our existing cash flow, where we're able to leverage that with our senior facility with Washington Federal. But beyond that, we also have the free cash flow, and between the two, we can reinvest that to expand our footprint while also building up that foundation.
So what's the offering then to shareholders? Are you looking for growth in the share price on the back of progress that you're making, or are you ultimately hoping to pay back in dividends? I mean, when you start to really bring this asset on.
Right now we're still in a pretty heavy growth phase. That's going to increase a lot from here at this point. We don't be expecting dividends this year, next year possibly, but we are in that position where, again, by being a producing company, by somebody that actually has cash flow, we will be positioned to pay out dividends if we want to go that direction.
Because you have already sold an asset in history back for Nostra Terra. You sold a big bit of business in Oklahoma, didn't you, which presumably shareholders benefited from?
Yeah, and it was exciting. It was during a rough time in the market when, frankly, not a lot of people were paying attention to oil and gas, and it was a difficult time for the industry. But it shows what we were able to do, where we were able to buy this asset. We went into a play. It was a play that hadn't been horizontal yet. It had been vertical wells drilled over decades. And it was an idea that you could actually, because of the reservoir being a tight reservoir, not too permeable and pretty tight porosity, the idea that you could go in and drill that horizontal and have an increase in production. And so we're in an area where you've got wells that are doing 1 barrel, 2 barrels a day, some of them that are plugged and abandoned. It's an old sleepy area nobody's interested in. We go in there and we started leasing at $200, $300 an acre. We kept leasing it at $1,000 an acre. When we were drilling wells, they were coming on at 400 to 1,000 barrels a day. And we ended up in a very nice position there. We built that up, and we sold that out during the downturn in the oil market. And that's where we started our reinvesting and our repositioning of the portfolio into Texas.
So what is it then that's priced into your shares at what, 3¼ pence?
You know, it's kind of shocking, frankly. I mean, here we are at 3¼ pence. We're about 5 million market cap. And we have, we've had little liquidity in the market recently, and that's not just our stock, but that's market wide. We've had lack of news flow, and that's particular on our company, but we've been very busy behind the scenes. And just because there's lack of news flow doesn't mean that we're not busy at work, and we are. We're extremely busy. We're excited about what we're working on, where we're working, and we're excited to materialize that and deliver that to the market. So the thing that I would leave you with, and I'd leave your followers, your listeners with, is the challenge. Find a company out there that's sub 50 million market cap, that 1 is producing, 2 is cash flow positive, and 3 has facilities like us.
Okay, so where do you go from here? I mean, investors looking at this story, what's the next line of attack in terms of some of the headlines you're watching out for, some of the milestones you want to achieve, just to prove to investors that you are on track to deliver?
Yeah, so again, I mean, the foundation has been key for us, is to build that foundation, and we'll have our interims coming out shortly. That'll show and kind of underline where we are with that foundation. It's a little bit dated, of course, but but it does show that we've got that progress there. Beyond that, though, we've continued to increase our production. We've got the facility, our senior lending facility, that we've got another $750,000 increase on that here in just the last couple months, and so we've got some cash to spend from our free cash flow from our facility that we're going to reinvest and grow that foundation. So be looking for news about acquisitions and new wells coming on.
Yeah. Okay, all right, look, Matt, it's a pleasure. Thanks indeed for catching up with us.
Okay.
Matt Lofgren, Chief Executive of Nostra Terra Oil and Gas.